Perfect. All righty. Well, thank you everybody for joining. Angela Cleveland from North Country Council, Planning Coordinator, and I have been working on this for what feels like a long time, but I think it's only been about a month and a half now to get this coordinated for our staff and employees at North Country Healthcare. We obviously cover a lot of ground in the northern part of the state, so we wanted to have this opportunity for our employees to learn a little bit more about housing opportunities and whatnot, as it's rough everywhere right now. So I'll take this time and hand it over to you, Angela, to maybe introduce our speaking group.
Awesome. Thank you, Gavin. And yeah, it's last couple of months have been great to be able to coordinate with you and all the folks that helped us make this happen. Just a little bit of background. This funding is through New Hampshire Housing, and you will hear one of our speakers today is with New Hampshire Housing. And originally, this was about talking through employer assisted housing, and we quickly realized that the employers are the ones who it would be beneficial for them to hear the resources, so to be able to give those resources to employees, and so folks that they want to be able to recruit and retain. And so when I was talking with Gavin back in, I think it was March, we thought, well, let's just expand this to all the employees. So then the employer, which is a big one in the North Country, doesn't need to then trickle that down. So that was how this webinar was born. So we have three great speakers today that have been with us. I think this is our sixth session. And again, we've mostly been doing this with employers, but we did a session at the Mount Washington Valley Chamber of Commerce. We did one at Ski, New Hampshire last week. So you can see our employers and the audience has changed quite a bit, but the message is very still much the same. As the supply and the cost of housing right now has been a challenge for many folks. So there are a lot of resources out there that we want to bring to bear for folks today. So I'm going to kick it off with just a little bit of data and just a level set some of the information that's out there right now. And sorry, my sometimes there we go. All right. So I mentioned our speakers. We have Harrison Kanzler, who is with AHEAD, and Andy Carteret, New Hampshire Housing, and Denise Hubbard with the Meredith Village Savings Bank. And I'm going to have each of them give you a little overview of who they are, but I wanted to have you see who our speakers were for today. So we talk a little bit about both again the two issues I guess we have in the North Country and beyond is the cost and the supply of housing, but it's important to remember where some of that is coming from. The median household income is part of our challenge. That's where the cost piece is coming from, and the state is around 90,000, but then our three counties that are within what we call the North Country are well below that. In some cases, well below that. In Coos County, for example, which is where most of your offices are, I think, maybe some of them being in Grafton, but. So yeah, that creates challenges for where the housing market is right now. And we'll see that on this next slide, if I can advance it. There we go. So in COAS, we looked, this was work that AHEAD did to better understand where we're going with the gaps in what the cost of housing is and the median income for the people who are trying to buy those houses. And in COAS, historically, we've seen that that buyers income is actually more than that housing median housing price. But unfortunately, in 2022-ish, maybe like end of 21, 22, we're starting to see a gap where that median housing price is going over what people can afford, and their median household income, with a gap of 53,000, actually just over that. And in Grafton, we've seen some flip-flops all over the place, and I'm not sure what the mix of people in Grafton and Coas is, since there's quite a distinct line right there where Bethlehem and Littleton is. But it's flip-flopped quite a bit over the years, 2003, 4, in 2008 when we had the housing bubble, and then again in 2021. But now the gap is even bigger and growing. And so now we're seeing about a little over 143,000 in a gap between what people can afford and what the median house price is in Grafton County. And in Carroll, it's flip-flopped quite a bit. In fact, it actually mirrored itself here in 2001 and 2000 to 2003, and again in 2009, 2010, 2011. But since then, it's really been either just below or now at and above, well above what people can afford. So looking at $216,000 of a gap, and again growing significantly since 2020 now. And so we looked at the cost piece, and now we'll look at the supply. Back in 2023, all of the regional planning commissions, which is where I'm from, the regional planning commissions, there are 9 of them in the state, and we look at housing, economic development, community development, and housing really touches all of the things we work on right now. We're also in transportation planning. And so this was a really important thing for us to have as a foundation for our work over the next several years, not just in North Country, but in the state, looking at what the gap is between the current housing supply and what we actually need. So in blue, you'll see the ownership units that are needed, and we'll focus on, maybe these top 4. Not that Conway's not important, but most of you are probably more so from these 4 labor market areas. That's what we call these. So the Littleton area, we're looking at a need of 812 ownership units and 448 renter units. Haverhill a little lower than that, but the population's also not as dense. So in relationship, we're looking at, that hopefully that this is looking at, the percentage of how many people are in need of in these areas, but as a percentage of the population, I should say. So 50 renters in Colebrook, 77 ownership units needed. And then in Berlin, a little bit higher, like in the middle, basically, of almost between these two, 132 units needed for renters and 199 for owners. So we're seeing this need, and communities are working on this through a variety of resources on the supply side, and builders are as well, but it is a challenge in this market. We don't talk too much about the other piece, and I know Andy might, which is the actual supplies and labor needed to build these housing, but they have a lot of great resources that they'll present today to talk through how we can at least look at the cost piece of that. So we don't need to talk too much about this, but I do think it's important. And many of you may have experienced some of these things as you're either going into this job or in previous jobs. But job loss risk is a big thing, especially for renters who may not be in a stable situation. Maybe they're renting a house that is actually on the market right now, or it's rented out as an Airbnb sometimes during the year. So we do need to, that it is a risk for them because they don't know if they're going to be able to find a place that's within a good, a reasonable proximity of where they're working. And, between 11 and 22% of them are more likely to lose their jobs when their homes aren't as close to where they where they work. Commuting time and stress is a really big deal as well. Whether it's not necessarily traffic in the North Country, but just the long commute times, maybe having to ping pong between picking kids up at daycare, or maybe they're taking a class themselves in the morning. But that does end up looking at some productivity time being lost. And then it really plays on physical and mental well-being as well. And again, not as much in the North Country, but maybe in some of our more denser communities, cramped spaces or noisy neighborhoods that they're dealing with, in order to be able to afford the house where they live right now, whether it's a rental or a home that they own. But these things tend to, really to play a large part in our physical and mental well-being and how we perform at work. And then the last piece is financial. Again, if people can't afford to live as close as they would like to their workplace, that does definitely increase in gas costs. And then we talked about the physical piece, but how that plays into them sitting for a long period of time to get to their job, stress in actually driving, especially in the winter or during, high wildlife migration areas. And then their overall job satisfaction and performance that is also a big piece that we need to think about in how the financial stress plays out in their everyday life and everyday work. So housing is a basic human right, and this is recognized around the world. And so that right is to live in a safe, peaceful, and dignified place. And all of our speakers today are helping to make that right a reality. So I'm looking forward for you to hear that today. What we can do as a group, but hopefully if you can encourage, if your HR director is not here today, or if this is something of interest in some sort of maybe committee that you'd like to put together on housing or on resources available to your fellow employees, just thinking about what can be done to help you streamline your situation, allowing for time off or flexible hours. Looking at maybe if there's a committee situation, maybe Gavin can help put that together. But having seminars, and you'll hear about some of those today, maybe around first-time home buying or credit health. And then thinking about surveying your fellow employees, what do they need? How can those educational seminars meet the needs that they have in addressing housing and things related to housing? And then hopefully track the effectiveness of the efforts. And again, if it is a committee that you start or work with, how are the needs might be changing for your fellow employees and yourself. All right, so you'll hear a lot today. We're not necessarily going to dive into apartment availability. I did see, and thank you to everyone who gave us feedback about what you'd like to hear on this webinar today. We're not necessarily going to dig into the availability of different types of housing or apartments, but there are resources out there to connect you to where the best places are. I should say not the best places, but the best way to begin your house hunt, an apartment hunt. And talk a little bit about rental applications and where the assistance that can be done, that can be given for those, home buyer education, some resources around financial literacy and assistance, credit health, loan programs, and foreclosure assistance. So with that, I'm going to turn it over to Harrison, who's going to dig into some of those resources today.
Excellent. Thank you, Angela.
Okay.
And I will, I did read through what people were looking for. So if I'm not touching on everything that's on the slides, it's because I'm trying to tailor this to what the folks who are on the call were looking for. And to Angela's point, I will just say and put in a plug quickly, as far as availability of apartments, the easiest way to check is to our social media pages post our vacancies where we have openings for apartments. You can also subscribe to our newsletter, which usually covers where we have available apartments. And just as, I don't know if this is really insider information, but for those on the call, if it is family housing, so what we would typically see as being more of the workforce demographic, the only places that Ahead has those apartments are in Bethlehem, Littleton, and Lisbon. All of our other apartments, like all throughout Coos County, are actually age-restricted apartments. So those are predominantly 63 and older apartments. But if you have folks in your workforce who meet that criteria, then we do have availability as well in Berlin, Colebrook, and Lancaster and things like that. But for families, it's just Littleton and Bethlehem and Lisbon are where we have apartments. So if that's what you're looking for, keep an eye on those markets. And then, Angela, could you advance the slide for me real quick? Thank you. So one thing, I know folks were interested in credit health and things like that. So one thing that Ahead does, education is a big part of what we do. We do have a homeownership center that offers all kinds of free courses that are on things like credit health, budgeting, and and foreclosure. So if you have any clients or if anyone on staff is already a homeowner but they're struggling, we can help them out with that. We do also have first-time home buyer classes. That is the only class we offer that has a fee. We usually have a discount coupon that we can give to you. So if that's something you're interested in, you should reach out to myself or to our homeownership staff, and we can certainly try to figure out how we can get you that course is $100. We typically offer a 50% coupon, so it would be a $50 course. And We have that in 3 different forms. The first-time home buyer class does come through as either an 8-hour, 1 full day session in person. I believe we do a 2 4-hour virtual version of that. And then we also have a self-paced online course that you can sign up for, and you get the materials and you do it kind of as you have the time to do it. It comes through in different modules. And so that's a bit more flexible for folks who need that. As far as budget counseling and credit counseling, we can do that one-on-one. We can do that in, if someone comes to us for help. We also offer it as online courses. Some of those we also have as self-paced online courses that are free that you can take. And if you are, if you have kind of a cohort of employees that would benefit from that, we can also come on site and do it for free on site. So we're happy to kind of tailor it however it's needed to make sure that that works. The credit one definitely is an important piece, especially if there are folks on here who are considering purchasing and becoming homeowners. Credit is going to play a huge role in that, and I will leave that to Denise and Andrew to talk about a little more. But it's certainly something that we can help with and help folks get by. Another big part of that is rental application support. And I say that in terms specifically of AHEAD. All of our properties are subsidized, and as a result, our application is not a typical rental application. It is a very lengthy document. It's pretty arduous as far as getting it filled out. Our staff can support with that. Another thing that we have found to be helpful as we've worked with some healthcare providers in particular is if you are willing as an employee, there is some paperwork you can fill out that will let us work with your employer directly. And that can help us get some of the paperwork that's required a lot faster if we can connect with your employer directly, as opposed to, legally speaking, we can only communicate with you. So even if you want your employer to talk to us, if they have not filled out kind of the third party advocate paperwork, then we can't talk to them about your application in any way legally. It has to go through, all communication has to go through you as the applicant. And it doesn't have to be your employer. If you're working with a service provider in the area or some other benefits-based organization, they can be the third party that we can work with. Sometimes, again, it just helps as far as structuring and making sure that you're meeting all the timelines you want to meet and getting all of the documentation you need in to make sure that the application is successful in the first try. We do offer, and if it's not, we do offer an appeal process. So make sure that you sign up for the appeal, because it's also, again, it's a federal process and it's very clunky. And sometimes you are denied for a reason that we deny people all the time, but is like a literal loophole situation where all you have to do is ask for the appeal and give us a brief explanation. We say, okay, overturned, you're accepted. It's a very silly system, unfortunately, but we have to work within the confines of it. So a denial is not necessarily a denial. Sometimes it's just that we need clarification through an appeal process. So make sure you read all your documentations that you get. And that's why it can sometimes be helpful to have a second pair of eyes on it. We can help with, as far as apartment and home search, realtors don't love working on apartments. Sometimes you're on your own in that regard. But home search, certainly look for realtors. I would say part of the education process is knowing that you're probably going to want to get pre-qualified or pre-approved prior to really starting to look for a house. But for all of that, I would say if you're thinking about getting into home ownership, certainly take our course, because our course is also a prerequisite for some of the down payment assistance programs that we have. And I don't want to get ahead of myself, and I don't remember what's on the next slide. So Angela, will you advance it for me? And perfect. Okay. First bullet, down payment assistance programs. I thought I had the cadence down. So AHEAD does offer its own down payment assistance program. It's called Pathways to Home Ownership. And we have one in Coos County and one in Grafton County. The one for Coos County, it is a 5% down payment up to $15,000. And in Grafton County, it's also 5% down payment, but up to $20,000. So it actually goes a little bit higher. And that's both of those numbers are based on the median sale price of homes in those regions. And this is a proprietary program for people who are employed and want to buy a home in that area. So it is specifically for workforce. There are some income requirements. You have to make less as a household. You have to make less than 120% of the area median income. And we can certainly work with you to explain what that number is and whether or not your household meets that requirement. And given the group that we're talking to, I'll also let you know that actually there is overlap on those two programs in Littleton and Bethlehem. So if you are employed in Littleton or Bethlehem and you are looking to buy a house in Littleton or Bethlehem, you can actually access both the COAS and the Grafton monies. So you can actually get both of those down payment assistance, and you can stack it to get closer to a 10% down payment, which obviously would be very beneficial for you. We also work with Andrew at New Hampshire Housing, and our program can stack with the programs that they have. We can also help connect you with other down payment assistance programs. And when we structured ours, we made sure that they are able to stack with all of the other ones. Ours is also a grant. So after 5 years of owning and living in the home, it just disappears, right? There's no requirement to meet or pay back that money. So it's a pretty great program. We've helped over 20 households with it so far in the past year, and certainly willing to work with more. But again, we do serve all of Grafton County and all of Coos County. So if you're anywhere in there, if you're planning to live in there and you work in Grafton or Coos, come to us and we can certainly help you with that program. Another good thing to do, we've worked with a couple employers who, if you want to send them, if you are working for someone who says they want to be involved in housing and help stabilize housing for employees, as simple as putting down first month rent. It's a pretty quick and painless process, and it also is relatively inexpensive for an employer to help with that, depending on how many employees they're helping with it. But it's certainly something that we have worked with local employers to do, and we're happy to help structure that with you and your employer if that's something that they are willing to do. Something more like a housing stipend or a rent subsidy, a more prolonged process we have done in the past, and we're happy to help structure that as well if it's something that your employer is interested in doing. That can be a bit more of a legal process than just paying kind of a first month rent, but we are happy to do it, and we do have models for making that happen. So if you have a connection with your employer and you think that's something they're willing to do, certainly reach out to us. And again, we're always happy to come to the table and just walk through and kind of custom design what this would look like for you and your employer and us to all work together, making sure that we're stabilizing things for you guys is kind of our top priority. Advance the slide, please, Angela. And I'm done. So if you have any questions, feel free to reach out to us at Ahead, and we're happy to chat.
All right. Thank you, Harrison. And thank you, Gavin and Angela. My name is Andy Catterett with New Hampshire Housing Finance Authority. I am the Senior Manager of Marketing and Outreach in our Home Ownership Division. You'll see here our slide about who New Hampshire Housing is. We do a lot in New Hampshire around housing and affordability. As Angela said, we had given a grant to her organization to help provide these classes. We're a pass-through for federal tax credits for the development of affordable housing. So that would be rental housing. We do policy and planning at New Hampshire Housing around housing. And we also administer about 5,000 housing choice vouchers around the state for to help people with affordability on their rent. I am in the Home Ownership Division, and that's where you hear people say, well, isn't there a first-time home buyer program? That's New Hampshire Housing. We're the ones that administers these specialized programs. You can see our mission is to promote, finance, and support housing solutions for the people of New Hampshire. If you want to advance that slide, please. So on the home ownership side is where I'm going to focus. one, if you're interested in home ownership, there's like really two paths you need to take. If you're not sure where you are, or if you feel that you have things you need to work on, one path is to work with an organization like Harrison's Ahead. That's where you go, you take the homebuyer education, work with a counselor, get yourself home ownership ready. If you're feel that you're ready to take the next step, your credits and score, your income, you have that all figured out. The next step is to talk to a lender. That would be the other path. Our programs are offered through what we call our approved lenders or participating lenders. If you go to our website, there's a whole list of lenders that offer our programs. Denise Hubbard, who's on this, is one of our approved lenders. And basically, we offer a wide range of products, and not to dig into too deep to these products, because you're really going to talk to the lender to figure out which fits your need. I think just the big thing is be aware of big picture. We can do anything out there that a conventional lender can do. We just have some different tools in our toolbox to help make a home ownership more affordable. And Angela talked about, the price of land, the price of lumber, labor. We can't control that. So really what we have to offer is like good programs to help you get into housing. And I will say that since we're on Zoom, if anyone has any questions, I don't know if you guys raise your hands or if you type them in the chat, but would love to answer questions if you have them. So our maximum income limit, as you can see here, is 176.2 for the one that says flex, the one that says preferred, and then there's this home first. That home first category, that's really the first time home buyer program. That has different income limits depending on where you live in the community. And you may or may not need to be a first-time home buyer depending on where you buy. So that's why you really want to talk to a lender to figure out which one of these programs best fits your need. And I'll say a first-time home buyer is federally defined as someone who hasn't owned a house in the past 3 years. So if you haven't owned a house in the past 3 years, you can access all of our programs. If you have owned a house in the past 3 years, you can access the home for flex, the home preferred, and possibly the home first, depending on where you buy. Thank you. If you want to move that forward, please. So down payment was one of the questions that was on the list that we received from Angela. New Hampshire Housing's really the only trusted source in the state that can offer down payment assistance. That's one of the tools in the toolbox that we have. And so any one of our programs, you can receive up to $15,000 to help with the down payment closing costs. And the beautiful thing about this is Harrison was talking about what Ahead offers. This can be leveraged with what they offer. So if you work with Harrison's organization, you qualify for money there. You can then also work with our organization, combine those funds to really help to make, unfortunately, unaffordable home ownership more affordable through down payment and closing cost assistance. The other tool in our toolbox that I kind of didn't mention is, as a housing finance authority, that Home First program that you saw, that has a subsidized or really favorable interest rate. So you can come to New Hampshire Housing and we have tools to get the rate very affordable. We're a nonprofit public benefit corporation. We don't have stockholders, we don't have investors. So all we're doing is trying to help people get into their houses and make it more affordable. Below market interest rates is one way, and then this down payment assistance is another. I should say that this is not a grant on our down payment assistance. Harrison's is a grant. Ours is a 0% 30-year second mortgage. So you'll meet with a lender, they'll reserve the first mortgage with us, and then with that, they're going to reserve a second mortgage for that down payment assistance. It just sits there. You don't have to make a payment on it. If you sell or refinance, you do need to pay it back under our program. But you're using our money for free to get you into the house. So it's a great opportunity. And if you can layer it with other programs, that's even better. Trying to advance in that. We also have what we're calling a first gen program. And so I define a first time home buyer as somebody who hasn't owned a house in the past 3 years. If you've never owned a house and your parents have never owned a house, so you would be considered a first generation home buyer. And in that case, you can get an additional $10,000 in down payment assistance. So that 15 that we had now is going to go up to 25. And then if you get Harrison's on top of that, you could be walking into, purchasing a house with $40,000, maybe even more in down payment assistance to help you get to that house. That's where it's important to work with an agency like AHEAD or one of our approved lenders who really knows how to pull these programs together. New Hampshire Housing is really just the money behind the program, and the programs are offered through our lending partners. And could you advance? I'm not sure what's next either. Oh, and I just wanted to highlight that Harrison is with AHEAD. Depending on where you live in the state, there's 2 other organizations that do very similar things. So Home Team kind of covers from Laconia south, southern part of New Hampshire. And then the Housing Partnership is out on the seacoast. And then AHEAD would be Plymouth North type of area. And welcome questions if anybody has them. Oh yeah, and you go to our website, you can sign up for the classes there, what Harrison has, all other classes from the other organizations. You can look at our programs. You can find a list of all the lenders that offer New Hampshire housing. There's certainly a number of lenders in your communities that offer New Hampshire housing, and we're really here to help. So thank you.
Hello, everybody. My name is Denise Hubbard. I am with Meredith Village Savings Bank. I've been here for 16 years. We are a mutual savings bank, which basically means we do not have stockholders. So any profits that we make, rather than putting it back to stockholders, goes back into our local communities. And I've been involved with mortgage lending for about 40 years and partnering with New Hampshire Housing for about 30 of those. So I've spent a good part of my career working with affordable housing type loans and first-time buyers. And I go ahead, Angela, and advance that slide. So again, just piggybacking on what Andy had to say about first-time home buyers, you know, and again, where it gets important is just in some of these programs. And I think we throw the term first-time buyer around a lot, but it doesn't necessarily mean you have to have never owned a home. You basically, for some of the programs, as long as you haven't owned a home in the past 3 years, you still qualify. If you have owned a home in the past 3 years and sell it to purchase a new home, as Andy mentioned, the Home First product, which gives us the lowest rates. There are targeted communities where you don't have to worry if you've owned a home. And basically, for your region in Coos County, the targeted communities are Berlin, Lancaster, and Wakefield, and Grafton County is Littleton. So if you purchase in any of those communities, even if you don't owned a home previously, you'd still qualify for those great low rates that are offered through the Home First program. Next slide. So there are all kinds of programs out there. And so that's, you know, which helps our cause because, you know, there's so many different kinds of borrowers, so many different kinds of properties, and so many different needs depending on each individual situation. So we do have lots of options for folks in terms of the types of programs. Conventional loans are just your plain Jane vanilla 30-year, typically fixed rate that a lender would work with either Fannie Mae or Freddie Mac. And then some of the other options, which have been quite popular in the past few years, just because of some of the challenges we've been seeing with COVID and the economy, we have some of the government programs. And the first one is FHA. That is a program that only requires a 3.5% down payment. FHA is also a little bit more lenient in terms of credit history, debt to income, which is when we look at what is your overall debt, you know, obligation in relation to your income. There's also the VA program, which is available to most veterans, and that does not require any down payment. So that is where a veteran can borrow up to 100% of the property value. And then we also have another 100% option, which is through the USDA, called Rural Development. There are 2 different tracks on that. The first is their guaranteed loan, which is where you would work with a lender, and the other option is more for lower income borrowers, and that's the direct program, where you would work either directly with rural development or some of the home buyer counseling agencies like Ahead or some of the others package loans for USDA Direct. I'm not certain, and maybe Harrison, you can chime in on the funding situation for Direct right now. Last I knew, there wasn't any money available or very limited amount of funds. So that may or may not be an option at the moment, but the guaranteed program, we definitely have funds available for that. And again, that's basically 100% financing program.
I believe because of the continuing resolutions and everything, as opposed to a firm budget, there is extremely limited funds for those programs right now.
That's what I thought.
We are on a full year budget and it is funded.
Thanks. I thought that was the case. The good news is, even if you did say a USDA loan and it was 100% financing, we could still access even though they're called down payment assistance, if you're doing a loan that has no down payment, we can still access those funds for you to use for your closing costs. So if you're doing a USDA or a VA loan, you could potentially also get some of that additional assistance to help with your closing costs, which, really then your amount of money that you need to come up with is much less than some of the other conventional type products. And we've talked about the cash assistance. That is just an amazing tool in our toolbox one of the biggest challenges we're seeing for many, many borrowers is the challenge of trying to save money. And so it's really difficult to save up that 5% down payment and closing costs money. So the cash assistance loans have been a huge help in getting folks into homes and who otherwise they just haven't been able to set aside a large sum of money. And it's become a great tool for us. And last are portfolio loans. So portfolio loans are loans that a lender, mostly banks, but there are some types of portfolio lenders out there. Those are special programs that we keep on our own books. We don't work with an investor like Fannie or Freddie. We don't work with, a New Hampshire Housing. And those are mainly for things like new construction. So we do a ton of new construction lending. You might have a property type that's a little outside, the typical property, like a off-grid home or an island home or a berm home. Those are the types of properties that some of the government and conventional products just aren't willing to lend on. The other product that recently has gotten some attention, and there's a lot of discussion both in Concord and at the town levels about accessory dwelling units as hopefully as one of the solutions to our housing, situation and challenge here in New Hampshire. And that's where someone can put a separate unit, whether it's a detached unit or a unit that is attached to their current home, and then possibly rent it out, or maybe a family member could live there. And so that requires a special type of financing. And so some lenders, us included, have recently put together special programs for that type of loan. And so if you could advance it, Angela. So one of the important things to know when you do start down this road, home ownership and, getting into home ownership is a big process. It's a big responsibility. And so it's really, really important to educate yourself. And that's where, you know, the partners that we use, like New Hampshire Housing and Ahead, you know, provide some of those tools. And a big one is homebuyer education. I always recommend when I'm talking with a first time buyer that they take advantage of one of the first time buyer programs, because it really just really arms you with information. And so it's a little bit less, you know, daunting when you do sit down with a lender. You know, for many reasons, you know, we have a lot of federal regulations we have to follow when we do loans. And so there's really a lot of things that we have to look at when we, you know, meet with someone about getting a mortgage. And so these are just some of the things to be aware of, that when you or one of your employees, you know, come in to see us, these are the things we're going to be looking at. So obviously credit is very important. And although, you know, credit scores can range anywhere from 300 to 850, I don't think I've ever in my career seen an 850 credit score. I don't think it exists, but I'm sure someone out there has one. But in order to qualify for most of these programs, you really do have to have a score of 620 or higher. And what we do is we actually pull all three scores from Equifax, TransUnion, and Experian. And if there's two borrowers, we always are going to look at, you know, you're going to have a high, a low, and a middle score. We're going to look at your middle score, and whoever has the lowest middle score, that's the score that we're going to need to use for qualifying. And that currently is a 620 for most of the programs or higher. And obviously, the higher your score, you know, the stronger application picture you have, you know. And when we're working with someone, it's really like, you know, putting together your story and looking at your whole, you know, overall picture in terms of, you know, how much of a risk is any given borrower to a lender. And credit is important because how you've paid your bills in the past is a strong indication of how you'll pay them in the future. And that's why, you know, many people have challenged credit. It's not, you know, everybody has a bump in the road, and everybody's got a different story. But that's where, you know, agencies like Ahead are there to help people to kind of right the ship. And, you know, they will work with someone to, you know, if there's, you know, accounts out there that need to be paid off, or maybe you need to set up a payment arrangement, they're going to work with folks to kind of get them back on track so that they are mortgage ready when they come in to see a lender. And I can't stress that enough. Is to a lot of people just kind of put their head in the sand and just don't know how they're ever going to get out of it. But that's where all of these folks are here to help people to move forward and hopefully get to that point of homeownership. Capacity is just how we look at, again, how much can you afford each month? And, you know, your mortgage payment is going to be made up of your base payment on your mortgage, your taxes, your real estate taxes, your homeowner's insurance, and mortgage insurance if you're putting less than 20% down. So we're going to look at that number, and then we're going to add all of your other debt payments, car loans, you know, student loans, credit cards, and then we're going to look at what that number is when we divide it into your gross income. And so there are certain standards for each program as to how high we can go. And so, you know, maintaining a reasonable amount of debt in relation to your income is really important. And I know one of the things that we've really kind of seen some challenges with lately are the student loans. Lots and lots of people have student loans, and those student loans have recently gone back into repayment. And so we really have to look at those, and we have to use what those new payments look like. And so that is becoming a challenge for some folks. So just understand that we do have to look at that. And even if they're in deferment, we still have to calculate a payment for those loans, for those student loans. We talked about the down payment piece already and the different programs and what the down payment requirements are. And last of all, we look at the loan, the property itself. We want to, for many of these programs, they want to just make sure that people are getting into decent, safe, and sanitary housing, and that, 6 months after you buy your house, you're not going to have to replace your roof, or hopefully you don't have to, have a major repair issue. We can't obviously guarantee that something won't go wrong, but there are standards up front as to, especially with FHA, the appraiser is charged with not just looking at the value of the property, but the condition of the property. And they're going to report back to us things like peeling paint, the roof, the electric, the plumbing, just to make sure that, everything is in decent working order. And the other thing that's not specifically mentioned on here, but I like to typically cover, is employment history. So right now, for most of these programs, we do need to see a full 2-year history of employment with no major gaps. Doesn't mean you have to have been on the current job for 2 years, or even in the same position. We just need to show that there's a consistent employment history. And I get tons of questions on employment. So, if you have questions on that, you could reach out to a lender or to, a home buyer agency like Ahead, and they'll kind of work with you on that. But typically we're looking at that 2 years. What does it look like? Are there any major gaps? And if there are gaps, we do look for an explanation. So that's just kind of a quick look at the types of thing that a lender is going to be looking for from you when you do come in to inquire about getting a mortgage. You can go for it. Yeah, thank you. There are different loan types. For the vast majority of people right now are doing fixed rate mortgages. The rates, were super low a couple years back. They're up in the 6s again. I don't believe, with a lot of things going on around the world right now, that those rates are going to go down again anytime soon. I think they'll kind of fluctuate a little up and down right where they are. I don't have a crystal ball, but that's kind of all the indicators. So fixed rates are still a good way to go. Some people are looking at adjustable rates, which is where your rate is set for a fixed period, maybe 1 year, 3 years, 5 years, 7 years, even up to 10 years. And then after that initial term, it becomes some type of an adjustable rate where the rate can go up or down. Those are more risky, because you don't have that, you're not guaranteed that set payment for the whole term of the loan. So you just have to be, cautious about getting into that type of a product. And your lender is going to, look at that when they qualify you to make sure that it's, an appropriate program for you to go into. And I think that was everything. Again, it's a big process. It takes a village, and we work closely with our partners so that we are sure that people are, going to be in a good place to be, hopefully homeowners for a long time. And we're lucky that we have so many great partners and so many tools in our toolbox.
Awesome. Well, thank you to all three of you for sharing those. I always like hearing the little changes and things that you bring into this. So, and appreciate that this is our 6th one that you guys have pulled this together. So, all right. So just a quick recap, and I know that some of this might be more relevant to people in management positions, but even as an employee who may be able to develop a committee, or ask your supervisor or the HR person, work with Gavin to how to integrate some of these resources so that both they're on your radar on a regular basis, but also for your fellow employees at North Country Healthcare. So encouraging, some of this information to be part of HR packets or putting it on bulletin boards. I will have a flyer that I'm sending out to Gavin with the recording here that also has some resources that you can put on bulletin boards in your office with all of these resources you heard about today. So there's a QR code for each of those. Being able to ask for time off or flexibility in your work, if it's possible to do remote work. I'm not sure all healthcare folks can actually do that, but if you're in a position to be able to do that, as you're looking for housing or changing housing, that's an important benefit. And then thinking about some seminars, if there's something in particular, and we mentioned credit health, that was one of the ones that we saw on your feedback about what you wanted to hear for today, but also first time home buying or how to find a place working, I'm trying to think of some of the foreclosure assistance. There might be some assistance on that as well. And then, talk to your fellow employees, what do they want to hear about and what's going to help them to both retain or find their next new home. And if there's any technical assistance or revolving loan programs that your employers may have opportunities or something that they might want to consider to develop as well. And then, think about how effective these things are for you all. If there's more opportunity for us to do either virtual sessions through AHEAD or through us, through North Country Council or through New Hampshire Housing, think about what we could do to make sure that we're keeping on your radar and helping you find that next house or to retain your existing house. And with that, here is our contact information for the 3 speakers today. And we'll open it up to some questions. If folks have those, I'm going to stop sharing. There we go. And feel free to come off mute if you'd like. I don't think there's that many of us. I think there's 11, 12. So, or you can raise your hand if you'd like. Any questions? Wow, I think that's a first. If you do have questions afterward, though, feel free to either reach out to Gavin or now you have my email as well, because I sent you the meeting invite or the calendar invite for today. But I will send the recording. And actually, I will stop that right now. I will send the recording out.